You have helped hundreds of fund managers start a VC fund and manage it. You've lived across 3 continents and launched startups. And now you're a deal specialist at Cell Group with a deal receipt. Welcome to the podcast, Connor.
Thanks, Joe. Nice to be here.
So really looking back, when you connect the dots all the way back to maybe even your upbringing, what has made you become the VC you are right now?
Probably a bit of a rebellion against authority. I like creating my own way and not listening to other people. Not really good working for other people. And so that always drew me to entrepreneurship. And there's a special type of something weird with entrepreneurs, right? Something strange in their minds. And I like being around that. The idea to look into the world and see this doesn't currently exist. Everybody who's tried to make it has failed. Yeah, I can do that. I love that perspective on creation. So it drew me ever since I was younger, and now it's my career, is trying to create the right structures and funds that can support the next generation of entrepreneurs.
So talk about that. Like, what is the startup bug that you've really caught at the really beginning before you even went into VC?
Yeah, well, my roommate came home and he said, I got a cheeseburger with this guy at a conference who's going to start this civic tech platform. It's going to help people connect with politicians in a way that's really meaningful. And I was like, that's dumb. Nobody's going to use that. But we kept talking about it. And then he got a meeting with a high up politician at a certain country. And I said, what happens if this person says yes? How would you roll it out in this particular country? And he's like, I'm not really sure. I was like, I'll come up with something for you. So I put in a little 4 or 5 page document about how you could roll out a social network in that country. And then he's like, oh, could you do one for the EU? And I'm like, oh, come on, man. And then we started with meetings at the EU, and then I'm going to Brussels, and now I'm a co-founder. The bug just bit me. The idea that you could just create something that didn't exist, that you could just email people and say, hey, I could build this if you want. And they go, yeah, we need it. That was really addictive. The ability to go to bed at night knowing there's something exists in the world today that didn't exist when I woke up, and I just made it. And especially if it creates value for people, that's really cool. So ever since then, I was hooked, man.
Yeah, it sounds like there's just some sort of personality traits or qualities that a human has that really brings them into the startup ecosystem. Like we talked about, if you want to break into VC, you want to first really just break into the startup ecosystem. So who is VC for? Like, what qualities should they have?
Break into VC is not the terminology I would use. I have a semantic issue with the name of your podcast, which is I see VC as a funding mechanism. You may as well ask, how do I break into convertible notes or something? Or like, how do I break into whatever? It's just, this is a funding mechanism. It's a type of funding that goes into startups. The better question is, how do I break into startups? Okay, that's a good question. So what type of startups are you talking about? Okay, I'm talking about UK energy and climate tech at pre-seed and seed. Okay, excellent question. How do I break into that industry? Now we're talking. Now, VCs will be part of that industry, but they're not the whole thing. There's also accelerators, incubators, universities, startup networks, think tanks, corporates that are spinning out solutions, right? So there's exited founders. There's already startups. There's people who are thinking about starting startups. There's this massive ecosystem along that niche of stage, geography, and industry that you're looking at. Think more about how to break into that niche, how to become known in that niche. And then if along the way, somebody at a VC firm says, hey, you're great, you know everybody in this niche, come join me, go be my partner or be my associate or my analyst because you know every deal in this space, then great. Then you've broken into VC. The more important thing is you've added value in that startup ecosystem. And it's just as likely that somebody says, come help us with our university spin-out program, or come run an accelerator, or hey, be my co-founder. And I think that if more people thought about breaking into the startup ecosystem, you'd have less people. Like, the most important thing for people to understand is that this route to getting a job in VC that existed a couple years ago, it doesn't exist anymore. It's gone. Like, associates and analysts are, you put one role out and people apply to it. And the person that you're going to hire for it is like, well, he's a founder or she's a founder that I invested in that, you know, it didn't work out, but I know their work ethic and they know the industry better than anybody. I'm just going to get them to be my associate. Have them come work. It's somebody you know. It's somebody that's already broken into that ecosystem and done something. It's somebody who ran an accelerator or ran an incubator or ran a startup that failed or that exited. It's not going to be somebody just like off the street. It's you have 4,000 applications. What are you going to do? You're going to pick the most impressive and well-networked person. You purchase when you hire somebody for a fund, you purchase their LP access, their deal flow access, and their credibility within that niche of stage geography industry. So the idea of like, well, am I the right person to apply for a job in VC, or like, how do I get a job in VC? I think it's totally the wrong question. The right question is, how do I add value in a startup ecosystem that I find really interesting and that I'm passionate?
Yeah. And it's really just how do you niche in enough within the startup ecosystem so then you're known for it. And then you get asked to really help with the VC team versus like, hey, how do I just break in as a junior VC role, right? And you need to have some sort of superpower that you're helping with, right? Whether it is getting deal flow, secondaries, or port help. So for you, if you had to choose one superpower, what is your superpower, you see?
People. Look, I like meeting people. I like talking to people. I like connecting to people. I only have 3,000 LinkedIn connections, but I know every single one of them. I've exchanged messages with every single one of my 3,000 LinkedIn connections. And if I haven't sent them a message, I remove them and I clean it up once a year. So every single one of those 3,000 people I can connect. And I say the same thing to all of them. Let me know anyone in my network I can connect you with. That's my superpower, dude. I'm a super connector, but I'm not really focused on a startup niche. That's not my path. What I enjoy doing right now is helping VC managers raise and run really good fund ones or fund twos. That's where I'm most passionate about. It's like a different kind of founder, right? The managers that are starting new funds. So I'm really passionate about that right now. And I think the hyper connector is probably my superpower. But I'll say this, I reacted a bit when you said superpower. I don't think you need a superpower. I think you need a couple things. Number one is you need to add value. A 19-year-old who's attending college and never worked at a startup before can still find a way to add value. Something. Just like we had a guy that joined our company to do social media, and he just like commented on every single thing we put out on social media. Really valuable, high interest comments that started conversations in social. Now he runs our socials. And you don't have to like bring 50 years of experience in communications to the job in order to do that. What do you need to bring? Value. So like those comments are super valuable. You need to bring consistency. He did it like every day for a year, man. He's crazy. So add value and be consistent. And third is humility. Those aren't superpowers. They're just things that you practice. If you show up to startup events and you add value to every single founder that you can possibly add value to, sometimes that's an introduction, sometimes it's advice, sometimes it's ideas, sometimes it's just like, hey, let's go grab a coffee, tell me what you're struggling with. That sounds hard, I can't help, but like, tell me more, express it. It's therapy. You can add value in a lot of different ways, right? Helping people hire for open roles. You don't need to make money off of adding value. Just add value and do it consistently. If you do it over a year or two, people are going to see that you're helping out everybody. How do you want a VC to hear about you? Through your CV, or because you've actually helped all of their portfolio companies and they all mention you were super helpful? You're much more likely to get brought into a fund or to be able to create a fund if you've got the reputation of always adding value.
Especially in the VC industry where it's all relationships, right? It's all who knows who can intro me to who. So for aspiring VCs, like how do you even start to build those relationships? Like, could you walk through some scenarios? Do you just go to events? Do you go to some specific type of events? Do you just do it online? Like, how would an aspiring VC actually start to build these connections with VCs and founders?
Right. It's about people. You need to meet people. People are at events. Events can be a good way to meet people, but they're not the best way to meet people because they're loud and crowded and busy. You can get an entry point into people and set up a follow-up meeting at events, hook people in 5 minutes, find out what you have in common, see if you have any value to add, get their card or their LinkedIn and say, I'm going to get in touch and set up a meeting. Let's chat about this next week. I think there's things I can do to help you. Get their contact information and move to the next person. That's what events are good for. And then the follow up matters. Do what you say you'll do, set up meetings and talk to them. Even better is get warm intros. Start asking the people in your network, who should I know within this particular combination of stage, geography, and industry? Who should I know? Who should I talk to? Who do you think I can help out? I'm not looking for a job. I just want to add value in this ecosystem. Who are the most important people to meet? And then meet those people one on one. And in every single conversation, ask this question: who should I be talking to in this industry? Are there people you know that can use some help? I'm just looking to add value and I'm not looking for consulting gigs or a full time job. I just want to help. I'm really passionate about this. Do you know anybody that I should talk to? And if you do that and if you do it consistently, you'll be surprised at the results.
So let's say you've got that meeting, right? As an aspiring VC, you've got that meeting. You talked about exactly what Connor says. What about after the meeting? Like, how do you maintain that relationship? How do you say like, oh, hey, can we just have another meeting? Is that how it works, or how would an aspiring VC actually maintain that connection with a VC?
Meeting one, establish what you can do to help or add value, and then do it. It's that simple. Find a way to add value and follow through on what you say you'll do. You don't need to just talk to somebody and then 2 months later, when nothing's happened and you haven't done anything and you're completely irrelevant for the last 2 months, you say, hey, let's talk again. Why? What's the purpose of us speaking again? But if I said 2 months ago, you know what? We need a senior electrical engineer, somebody that's really familiar with these types of whatever systems. That's our biggest challenge right now. And within 2 or 3 days, you had 4 or 5 profiles of people within your network that are senior electrical engineers that are like super impressive. And you sent those to me, and I said, hey, thanks. I'm going to check these out. Could you introduce me to this guy, or could you introduce me to her? She seems really great. And then you introduced me to those people. Guess what? Now, when I follow up after 2 months, I have something to ask. Hey, how'd that job search go? Did you end up hiring one of my folks, or did you find somebody? What are you looking for now? Let me know if I can direct anybody your way. It's all about value, man. Networking is about value add. It's not about talking regularly. It's about figuring out a way to add value. For some people, the value is the conversation. I'll just say that. Some people really like to just talk and just have somebody to bounce ideas off of. I have a couple founders in my network that are like raising 100 million, 200 million rounds that are just like, hey, Connor, can we talk? I'm like, yeah, sure. And then we talk. And after 50 minutes, I'm like, hey, I just want to make sure, is there anything really concrete that you need from me? Any questions? I just like talking to you about this stuff, man. Thanks. It's been super helpful. I have no idea what I did, but they just like talking. So great. Those people are fantastic. But then most people have a need. Find out what it is and do what you say you'll do.
Yeah, and the funny thing is that a lot of people, especially startup founders, they just like to yap about their startup, right? Like they just love to talk about it. So even if you go to events, you go to places, they're like, hey, what are you building? And they would talk forever about that. So it's not like, hey, I've got to be this extreme extrovert. You just got to be a really, really good listener. So for Connor, right? Like, tell us about how you were adding value that led up to you getting the decile role.
Yeah, so I followed a non-traditional, well, let's say I'm advising people to think about their startup ecosystem, think about how they add value within that ecosystem as a way of building your personal credibility, as a way of laying the groundwork to maybe start your own fund someday, and as a way of sort of breaking into that startup industry that we were talking about earlier. My route was a little different. I got a residency at the end of Venture Institute, which was with Decile Group. That's a company that helps people start and run VC funds. I joined the deals team, a guy named Neil Strickberger, and there was an opportunity to stick around afterwards. So my credibility came through, first of all, 10 to 15 years of building startups before I took Venture Institute, building them across different continents and in different industries, right? So, and working with startup networks, like I work with the World Summit Awards, which is a global competition for startups across every industry you can think of, aligned to the SDGs, anyways. So I bring this hyper generalist geography and industry viewpoint to things, which they really needed. They needed somebody that, yesterday I reviewed a space tech startup, I reviewed a Latin American fintech startup, and I reviewed a blockchain startup. And the next one on my list is something in India that looks like deep tech. And you just gotta, just roll with it. Try and find some red flags, help the manager where you can. So my skill set was built for this role, and I worked my butt off and stuck around. So that was my path into it. I sort of short circuited it by going through Venture Institute. But again, this is not a common path, right? It's just my path.
So for our audience, right, like who doesn't know Venture Institute, talk about that. What is that?
Venture Institute is a good first step for anybody looking to get into VC. It is a training program for the next generation of venture capital professionals, right? So it starts with what is VC. It gets into how VC works, like how do people make money with VC? When a startup exits, what does that mean? Like, how does the money flow back to the fund? And who are the investors behind VC funds, why would they invest? How does a VC fund build its portfolio model? Like, how do venture economics work? Why would you say, from a venture fund economics perspective, the difference between like a 1x and a 2x is relatively small for a VC? If you just stay at the valuation they invested at for 8 years, or you double over 8 years, it doesn't really budge the overall economics of the fund. So why is that? Like, even as a founder, that's a really interesting statement and maybe an awful statement, but Venture Institute will reveal sort of why VCs think the way they think when they're talking about 10x and 100x returns, because they kind of have to with their investors. So goes through all of that, plus all the back end of how a fund works, venture accounting, and careers in VC. And it's free. It's something like 500 people participate every cohort, 400 or 500 people from all over the world, truly global program. I took it and it was my route into Decile and into VC in general. So highly recommended.
And one thing that I really do like about Venture Institute, and this is just from my experience from having it in the third week right now, is that it really goes deep into your local startup ecosystem. It makes you really just become that champion and build connections specifically in that local atmosphere. So then you really are the niche expert for one area and you really are the go-to person, right? For all these founders. So that's one thing that I really do like about Venture Institute. On the other side, right? Like VC, Decile Group also has VC Lab and Start Lab. Talk about that. What is that for the aspiring VCs who want to start a VC?
Sure. So Venture Institute is the training program, right, for up and coming venture capital professionals. VC Lab is an acceleration program. VC Lab is an accelerator for VC funds. So the goal there isn't, to acquire some knowledge and skills and think about your next steps. It's to close a VC fund. So it's also free. It's also a global program. It'll be on cohort 21 by the time this releases. So people who are interested can check out govclab.com. When you're in VC Lab, you can consider whether it's right for you to start a full sort of standalone VC, which means this three-entity structure, management company, GP, and LP, which makes sense if you're targeting a raise of 10 million or so, or it might make sense to start a start fund. Start fund is like a micro VC. You can start one at a smaller target, let's say 5 million or even under. We always recommend to shoot for a little bit more. Start a start fund. That'll be, you will essentially run your LP with our management company and GP. So it's a faster way to get started with a VC fund. What it means is that you can accept LP checks of down to 25K, right? Which totally changes the game. It used to be if you're going to start a VC fund, you shouldn't accept any checks less than 100K. It's just not worth it. But now you can accept checks down to 25K. You could start a $2 or $3 million VC fund just to get a track record, deploy it over 12 or 18 months, and now you've done your fund one. Now suddenly it's a heck of a lot easier to raise a $10 million fund too. So Start Fund is a much smaller, faster fund that you can basically start in a day at zero cost. There's no cost to it until you actually close on money. And it's a fast and great way to get an immediate track record. So those are some of the main things we're working with at the moment. It's free. There's no catch. We're not, we're not forcing you to pay us at the end of it or anything. It's a free program that's totally self-run. And it basically says there is a replicable model of how to refine your investment thesis and build interest through LPs, right? And we're sharing that. We're open sourcing it, like free, go, done. Limited partner agreement, done. Don't have to worry about that. Don't have to spend 50K with some lawyer drafting it. We got it. It's called the Cornerstone. You can get it right now, download it in Word document file. You can do it. How should you structure it? Here's your guide. You can, there's no mystery to any of this. It's like we've open sourced it so that you don't have to waste 150 or 2K on structure and things. Then you have folks like Adeo and Mike Supravici that have seen 1,000 funds launch. So they can spot the rookie mistakes a mile away. They can see when somebody's over engineering or thinking too much about the structures and the processes and not thinking enough about LP value. You want that insight.
Yeah. And talk about the history of Decile Group. Talk about maybe even Adeo who has started the safe. which is like one of the biggest things in the startup ecosystem.
Yes, well, no one is truly sure where Adeo came from. He emerged out of the black cosmos, riding a golden cloud. So Adeo's been trying to fix venture capital since like the early 2000s. He started this platform called The Funded, which was basically like a book face, if you know about that, but for rating VC firms more broadly. So founders who had raised VC could leave their reviews about VC firms, right? Because he was seeing so much predatory behavior back then. Everything rolls down from that. It's like the safe note was like, well, convertible equity, convertible loans really sort of suck. So like convertible equity was the way to go because it was less predatory and sucked less for founders. And then he saw that founders weren't really understanding what they needed to have in place before they went to search for funding. So the Founder Institute is what he started, which is now a global network of, I think, thousands of accelerator programs since the early 2010s. Then coming out of that, it's like, well, look, we need to start educating VCs too about how to invest because we're seeing so many VCs that are starting these big funds and making ridiculous mistakes. Or we're seeing a lack of venture capital in most of the world's ecosystems. So that's where VC Lab came from, was like, let's just start helping VCs with a predictable sort of open source methodology so that we can try and get more ethical investors involved in VC. So that's sort of the genesis of all this, man. Like that guy's single minded on trying to make venture capital a better ecosystem. And so that's where we are now.
And what makes a program like Venture Institute, VC Labs, and the other accelerators and programs within Decile Group, like how did you guys get so much participation? How did you guys get people so hyped up and just genuinely excited about it? What was the selection process for people?
Well, dude, how do we get them to participate? There's a need. There's a crying need, man, especially amongst investors that are normally shut out. Like, here's the thing, dude. Like, if it were 10 years ago, like the only people that could start VC funds back then were people with like really deep family connections, a lot of personal wealth, sort of the Silicon Valley power capital. 10 years ago, like it was so opaque as to how to do it, so tricky purposefully so that you'd pay more for accountants and lawyers and compliance people. All of the methodology on how to start a VC fund was all private, and all these agreements with different LPs with different agreements, and you'd accidentally do something wrong and then you're screwed for life. You can never try it again. That's how it was 10 years ago. And so there's a massive demand of really qualified investors that historically have been shut out from being able to do VC funds because it's just too opaque and expensive. So as soon as VC Lab starts and it's like, hey, we're just going to open source this thing and help people, there's a massive demand. Why are people hyped? Because it works. We've launched 1,000 VC funds, dude. So in like 4 years, 5 years, like that's a significant little single digit percent of like all currently active VC funds. And if you look at it on a year by year basis, it's somewhere around half of all new funds are at least helped somewhat by VC labs. So it works and people are excited to be a part of it, man. There's a lot of people that have been shut out of it. So I think with VC Lab, they find a route to get started.
And within VC Labs, for the successful fund managers, was there any statistics that you can talk about, like maybe age range and maybe like their career path? Is there anything that's like standard or something that stuck out to you?
There's two elements that every new VC fund needs if they're going to successfully raise a fund: LPs and deal flow. LPs and deal flow. Those are the consistent elements throughout all of them. You're not starting a VC fund if you miss one of those two. So usually the folks that start funds are people who have been, and this is why we started our interview talking about this. They're folks who have been in a particular startup ecosystem for a while. They know where the founders come from, right? They know how to find deal flow, good connections at universities, accelerators, incubators. So they're the ones finding out about the deals first. They've already established their value within that ecosystem. By the time they start a fund, people in their communities are like, oh man, it'd be great to have Joe on my cap table. Holy crap, this guy really knows his stuff. He's helped me out so many times throughout the year. Because the best deals, dude, as an investor, you're like kind of hoping the founders help you out, right? It's like, hey, can I squeak into that investment round along with whoever, Sequoia and YC and all that? You hope you can get on the cap table. So they have credibility, they have deal flow. And then on the LP side, yeah, they have to develop a network of LPs. Not many GPs just start like knowing 100 rich people that they can just like, hey, here we go. But most of them have 10% or so of the fund that they want to raise that they could do with their existing network. And then they're talking about connections of connections. They're talking about getting one LP to sign on, but making warm connections to their friends and colleagues so that they can sort of expand that. So they all come with the beginnings of an LP network. Although that's something that, as you go through VC Lab, for example, there's a lot of work that goes into expanding and approaching an expanded LP network.
And talk more about that for LPs, right? Where, deal flow, you must have a great deal flow. So that's your existing experience. But then for LPs, like where would a VC fund manager who's like new to this, like where would they start? Is it strictly just like their friends and that's it?
Yes, it's your first LPs will be people from your close professional and personal network. People that know you and think that your shit doesn't smell, and they'll support you no matter what you're doing in your life, right? But they need to be qualified investors. So that slims it down. It's not going to be grandma, right? Like it's going to be some professionals that maybe, okay, I co-founded a startup 15 years ago in Switzerland, which is true. And like my co-founders, one of them is now this isn't a joke actually. He's like the mayor of a Swiss town, which is super cool. So like, guess what? When I start a VC firm, I'm calling Alexi. I'll be like, hey, my Swiss friend, because maybe Alexi could be a beginning LP for me. But what they need to do quickly is assess who can actually give them feedback within their network about, is their investment thesis reasonable? Is it going to be effective in the market? Could they raise a fund with it? And who else should they talk to, right? So my buddy Alexi on the Swiss Village may not be the right guy to do that, but of course he'd be one of my first supporters. So think about this. What we talked about earlier was like add value in your ecosystem, just relentlessly and consistently help everybody you can. Chances are your first LP will be somebody that you helped 5 or 10 years ago. That's how it goes.
They might be thinking, how do I ask for it? Do I just say like, hey, give me some money? Or is there a way that is way, way more effective?
First, find compromising photography. No, there's an art. There's an art and a science to this, man. Like, first of all, it's relationship based. You don't want to walk up to a close confidant and say, "Hey, give me money. I'm starting a fund." You want to ask for their advice and truly ask for their advice. See what they think. Hey, I think there's a market gap for funding in, EU based infrastructure for AI at sort of pre-seed. I see a lot of grants. I see a lot of government funding. I see some angels, but I don't see any institutional folks coming in early. Do you think it would be a mistake to try to start to create a fund around that? Or like what opportunities do you see? And take their advice. Be honest. Ask them and get them involved. Get them to help you refine the investment thesis. Call them after a month or two and say, hey, here's what I heard from some other people. I'm kind of focusing on this fund. This is kind of an interesting thing. What do you think about this approach? So that by the time you say you on board to be on this journey with me, it's not the first time they're hearing about it. Later, as you start to approach LPs that are outside of your network, that are warm connections, there's a whole methodology to approaching LPs, explaining, this is my investment thesis, which at that point needs to be super tight and refined so that an LP can understand it in 10 seconds or less. Your story, why me, why now, right? And then the third thing you're selling, dude, is you're selling your deals. You're selling deal flow. You've got to hit them with your deal flow and get them interested in participating in the awesome deals that you're seeing through your fund. And there's a whole methodology to that. So an LP could just be an angel investor. So if I'm doing pre-seed deals, like why would I invest into your fund? I'm lighting 20% of my money on fire. Plus, I'm lighting 20% of the profits on fire because, of the 2 and 20 model, which you'll learn if you take Venture Institute. So why would I do that? So you need to have your answers prepared. And usually the answers are, I'm getting into deals you can't get into. I'm finding them before you see them. I'm systematically doing this. You might sneak into 1 or 2 of my deals. I'll see you there. Love to have you with me. These are great companies that need your support, but they also need institutional investors. They need a VC on the cap table early because they have a 10x better chance of raising capital in the next round when they have an institutional player that's kind of came in and cleaned some stuff up, helped them be professional. That's the gap I'm going for. And I'm going to diversify your risk, right? You can invest in 35 startups, but God, it'll take you forever. Now you're making one investment, and I'm going to diversify your risk across 30 or so businesses all in this space, and they're all going to be great. So that's your pitch to LPs, right? So there's a playbook for those things. There's a process for how to refine that pitch, and it's VC Lab. So that's why we run VC Lab, is to try and share that with as many people as we can.
Yeah. And these two strategies that Connor literally just said, like you want people to be a part of your journey in creating the fund. And if someone is a part of creating it, they're more inclined to help even more, right? And then the second is like if you have really good deal flow, if you are, if Elon is starting a company and only you have access to it because you're in the family and friends round, then bam, every single person would want to be in your fund just for that deal flow. But there are many, many strategies, and I am so excited to learn about that in VC Lab Cohort 20. So talk about your day to day, right? Like pick a day in your calendar and tell me like 9 a.m. I do this, 6 a.m. I wake up, and then go down the hours.
Okay, how about Tuesday this week? I'm in a weird position, dude, because I live in Europe, but I work with Desau Group is a global company. We have folks in South America, we have lots of folks in Europe, but a lot of them are in the States, and the folks that I work with are mostly in the States. So my day kind of mostly takes place between like 1 p.m. and 10 p.m., right? So I have the least conventional mornings in the world in this industry, dude. I like wake up when I feel like it. I make a nice breakfast. I go for a walk. I call a friend. I get a coffee, right? Like I take a list down on like what are the things I'm going to do today. I go shop or exercise and then like make some lunch, make another coffee. And then somewhere around 12:30, I'm like, I really need to be doing something. And then the rest of my day is work. I'm speaking to you at 7:35 p.m. right now. I've got 2 or 3 more calls after this. So I don't know. In an average day on Tuesday, I took 1, 2, 3 calls with managers that are fundraising right now that I'm working with on how to leverage their deal flow for fundraising. So working with managers before first close, coaching them up where I can and learning. Also, like it's not just about like, oh, I have all the answers, I'm going to share them. It's also like I want to hear what they're doing and see if I can share some of their techniques with other managers. I had several calls with folks from Deals Institute. Usually, oh, there's a bad thing to say on a podcast, but usually if people ask, hey, you got 20 minutes, let's chat, I usually default to yes, unless I think they're trying to sell me something. So I had several of those. Oh, look, the core aspects of my job right now are reviewing deals. We work with about 100 or 200 actively deploying VC firms, providing sort of back office and fund admin support through Decile Partners, which is our fund admin. And that's who I work for, right? Like I support our managers who have already reached first close as they deploy capital into deals. So when they're ready to make an investment in a startup, they click a little button in Decile Hub, which is our software. And Decile Hub will send a note to me and my colleague Neil saying, hey, so-and-so VC fund is about to invest in this startup. They want you guys to, take a look at it. So we'll look at the term sheet, cap table, data room, deck, and the memo written by the VC themselves, and we'll provide some feedback. Hey, it seems like they snuck something weird into the safe note, or like there's some strange terms in this convertible note. You might want to seek legal review. We'll coach them on the memo. So like if an LP is doing diligence on your fund and they happen to look at this memo, what are they going to think about your deal evaluation process? And we'll even give some feedback on the deal. Like, hey, we read through everything and we're left with some questions about these aspects. You might want to think about these and do some further diligence or ask the founder or make these the to-do items during the investment round. So it's a lot of deal review. Other things I do is right now, I'm organizing a demo day with Venture Institute. So participants are sourcing deals and we're leveling up that program this year and focusing on sort of 10 to 12 specific investment funds and their specific thesis. That takes a lot of organization in the background. And last thing is deal sharing. We're facilitating deal sharing between our 100 and 200 and also working with some external networks that are maybe 400 or 500 other VC firms. Deal sharing is tough. It's very trust-based. To get a deal from somebody else is a huge exercise in trust. To share your deals outwards is a huge exercise in trust. That one's taken years to get an approach that works. We think we found it now with a partner of ours that we're working with, a guy named Mike McCombie, who's really awesome. So helping to organize getting more of our funds sharing deals and finding deals from other VCs. Those are the main topics I was tackling on Tuesday.
Yeah, I know that VC labs cohorts, they're free, but then if a fund manager who's new, who wants to use the backend software of Decile Group, right? That's called Decile Hub. That's a
Also
software
free.
for backend. And
Also
then
free. Yep.
Yes, also free. And then how do you guys make money then?
Yeah, what a great question. We're a fund admin, man, and we're a fund admin that partners with the funds that we support. So, like, when you start a fund, part of the reason that VC was always so hard is because you have to hire an accountant and a lawyer and whatever. So, one way to reduce that cost is to hire a fund admin, where you get fractional legal, accounting, compliance, KYC, AML support, right? Filing your taxes and keeping you in compliance. So that's what we do. That's all partners, and there's an annual fee to that. That's how we're in business, man. Same thing with start funds. So, like, we're the fund admin by default for all start funds because they're using our GP and Manco. So our whole revenue model only activates when fund managers actually close on capital and want some fund admin on the back end. So that's what we do.
So what does that look like? Let's say they closed it and then they want that legal backend help. Is that like 10x more affordable than taking law firms? What does that number actually look?
Yeah, something like that, dude. The thing is this, like, again, part of the systematic barriers that existed a while ago is that there were law firms that are sort of kind of familiar with what VC firms need. And so they'll whip you up some sort of bespoke document and it turns out they screwed something up, or some LP will request a customized change. And so now you're paying legal fees again on something that was already paid for. What we do is it like as close to the template as possible. And we help you with your objections to LPs when they want to customize that type of stuff, and guidance on, like, hey, this is something you can accept. That's something you can't accept because it's unethical or it's too much custom legal work. Hey, it's your fun, do it if you want to, but here's the implications of it. All of that helps to reduce the amount of overhead cost, keep the money in the deals.
Yeah. And that's the thing, right? Is that VCs should be focused on the founders themselves. Anything else, they should just like leave it to some people who can actually just do it right, right? So you mentioned like the deal sharing part. Like you guys said you found something that actually works. What is that? If you can talk.
Yeah, it's all based around trust and a balance of quality and volume, right? So if we have 130, 160 or so actively deploying VC firms that are currently essentially partners of ours, right? That's a lot, but it's actually not that much because they're all investing in radically different things in different places at different stages, right? So if somebody shares a deal, the chance that it's like a real home run, right, bullseye interesting deal for other firms within that count, it's actually relatively low. So we do have a lot of managers that are like, for example, if two managers are investing in like AI B2B SaaS in the Bay Area, they're usually getting in on the same deals. But beyond that, it's really hard to share. So what we're working with is partners that can help us to introduce our managers into vetted networks of VCs that have already existed for many years, where there's already a really good quality focus on deals, where the deals that are presented, the startups that are presented are really, really good, where the administration of the network is done ethically so that managers can be sure that founders are treated well, that their deal flow that they bring into that network is treated well. And it's really, really, really rare to find those networks where everybody is vetted, where the rules are strictly enforced, where it's like cool, it's fun to be a part of, it's well run, and the deals are good. That is basically a little bit of a unicorn to find, and we found one. There's a great guy that runs a deal sharing community that we're getting our folks to go experience. And yeah, we love that.
That sounds like tons and tons of work. So have that launched yet or how can people
Yeah, it's all
get
just running in the background.
where is that? Is that in Desoho?
No, that's mostly in my WhatsApp inbox. Look, it's humans, man. Like, it's just
Yes.
you got to know a guy who knows a guy, right? So, like, the guy who runs that network is somebody that one of our funds got into that network and then said, Connor, hey man, like, why aren't more of our funds like attending this? You should, like, it's great. So I started attending it, and he was running the deal sharing very well. So we're super enthusiastic to get more ethical funds that are making good deals into that network. So yeah, all just kind of running in the background, just people to people, man.
Yeah. And that's all it takes. So for, all of these fund managers who wants to start these funds, they're like, okay, so now I've got all the deal flow. I've got, the back office stuff. I basically have everything ready. Do I really need junior hires? And if so, when do I need that? If not, what type of AI can just help me so then I can optimize my fund as efficiently as possible?
Yeah, man. Well, let's talk venture economics for a second. If you start a 10 million fund and you take 2% every year, you have an annual budget of $200,000 for your fund. Subtract everything that you pay for fund admin, right? And any sort of organizational costs. You have basically a nice salary for one GP or kind of crap salary for two GPs. Right? Or a mediocre salary for one GP and like a bad salary for an associate, right? And that's like we're scraping the bottom of the barrel already with our little 200K budget. So you start a $40 million fund, right? You have a budget of 8K a year. Now we're talking. Now you probably do have money to hire a little team around you. That's great. People need to understand the majority of new funds are all starting around 10 million right now, like by not by number of money amount of dollars committed, because the mega funds blow that out of the water. They're raising $1 billion. Obviously that's a massive amount of, it's $110 million funds in one fundraise. But by number of funds, a ton of funds are starting in this $5 to $20 million range, where they're not going to have enough in annual budget to hire associates and analysts. They have to figure out how to do it themselves as a solo GP or maybe as a team of two GPs. Decile Hub is a software that's intended to help them do that. It's a way to store and automate a lot of your work, to use AI tools. For example, we have essentially an AI co-founder that's embedded within Decile Hub that helps you handle LP rejections or objections, hopefully not rejections, turns objections in a good path so they don't become rejections, helps you source LPs, helps you think about assessing deal flow, helps you write deal memos, like just upload a deck and your diligence notes and it'll write a deal memo for you. It'll draft a deal memo for you so that you don't need to do it. And then you're editing it, obviously, to add your voice to it. So those types of tasks that used to be, the associate or analyst, they're gone. They're gone. And this is what people don't realize. It's not like, oh, they're really hard to find. Increasingly, they're gone. So the far more viable path to working full-time in venture, which again, going back to our semantic issue, I wouldn't call it breaking into VC, but if you want to work at a venture capital fund, in my opinion, the most reasonable path to do that is to start your own fund. It's to invest your time and energy in your startup ecosystem, develop that value, get that deal flow in LPs, and turn it into your own fund. You're much more likely to be successful doing that because it's within your span of control than finding an associate or analyst role at a small fund. It just doesn't make sense economically.
Yeah, and especially like you said, economically, that 200K paycheck every single year for a 10 million VC fund, right? That also includes legal costs as back end and tons of other taxes. So, even as one GP, you're kind of comfortable, but when you add junior hires, you're done for, right? Like there's literally nothing for you to really work on. And in terms of for the AI, right? When did you guys create this AI? Was it newly launched? Has people already used it in IC and deals already got done? Like, what was the time frame for this?
Yeah, well, I joined Decile 2 years ago, actually, almost exactly 2 years ago today. And they already had the AI features embedded in Hub when I got there. So before that, you'd have to ask somebody else. But they were already debuting AI toolkits and particular parts of the platform that were AI enabled. But it's moving in a totally agentic direction now, where by the end of this year, it's going to literally be a AI co-founder that you can talk with that'll help you to manage your agenda and your next tasks and keep you accountable. So it's moving in a more agentic direction. But yeah, dude, these features are already in, they're already being used. I use AI tools every single day for tasks within Decile Hub just to help our managers, and our managers use them all the time.
Yeah, and even for Venture Institute, right? Like people have access to this. So those aspiring VCs can actually get a leg up. Could you talk about maybe a couple of Venture Institute VCs that have gone on to, residency and then into VC funds? Because I know that there's definitely quite a bit of junior roles as well from, this Venture Institute into actual VC funds.
Yeah, so a few folks from Venture Institute have gotten residencies and then turned that into full-time roles. So there's Bianca Schilling, who works at Apprentice Ventures. Sarah Romanko works at Geek Ventures, although hers didn't come directly from her residency. She did a residency with somebody else, and then she got that job later. I work at Decile Group. Pedro Coutinho is a guy that's based in Portugal, and he started a full standalone VC firm that's now a Decile Partners firm called Transatlantic Venture Partners that looks for Portuguese startups that are scaling to the US market and supports them. And he's like, he knows everybody within this Portuguese ecosystem of specific types of deals that he's looking for. So yeah, there's a good track record of folks becoming sort of chief of staff positions like Bianca, or associate roles like Sarah and I. There's plenty of others that get roles in accelerators, incubators, other VC firms. This is the program that launched their entry into a role. So I'm not saying it's impossible. Okay, but like there are 500 participants of VC Venture Institute, probably like 250 will finish the program. There's only like 40 residencies that you can get. And out of those 250 that finish the program, it's probable that like a dozen will get some roles in VC. It's entirely possible, but it's a tough road, man. The competition for those roles are fierce. And I would never say that Venture Institute is causational for that. Usually, the people that are getting those jobs are like relentlessly adding value within their startup ecosystem or building a good personal brand for themselves, helping out founders. Like go watch Sarah Romanko and how she posts on LinkedIn. My goodness, if only I could be that diligent. She's an incredible voice in venture capital, especially from the perspective of somebody who's not like freaking 56. She's like the new generation of VC coming up, and that's an unbelievable personal brand to build. So Venture Institute's useful. It teaches you a skill set. It fills in the gaps of your knowledge, gives you maybe a little opportunity with a residency to get some real world experience. But whether or not you get a job in the startup industry or in a VC fund is obviously mostly up to you.
Yeah. And personally, even at the third week of the sprint for Venture Institute, I personally felt like the materials there, and this is coming from someone who's not part of the team, okay? Like I am not a part of Decile Group, disclaimer. And I just felt like from all the sprints that we had up to right now, the 50 plus VC guesses that I've interviewed, their month 1, 2, 3, 4, 5, 6 plan is almost, identical to exactly the core components that is needed. So Venture Institute, if you just want the foundations of VC, really, really recommend it. And I hope to talk about, VC labs soon after I complete it. So could you, maybe talk about for someone who wants to start a VC fund, what would their month 1, 2, 3, 4, 5, 6 look like?
Okay. Let's think about it in terms of 6 months at a time. I know you want me to start with month one, but let's think about it in 6 month chunks. I don't know where you start from. Everybody's got a different starting place. If somebody wants to start a VC fund and they've been active in their ecosystem for 5 freaking years and they know every single founder, then their key challenge is LPs. And every single VC fund that I know, the manager will tell you, I started out with no LPs. I didn't know any LPs. So I don't know any LPs is an excuse and it's a solvable problem. You just need to start working at it. If you're much earlier and you're just out of college, you sort of attended some pitch competitions, but your goal is to start a VC firm, then you might need to make a 3 to 5 year plan where you really understand the ecosystem, where you can contribute to it, add value, learn. I don't want to say that young people can't be in VC firms. Young people must be in VC firms, but you have to establish yourself in the ecosystem and be known and be known as somebody that can deliver value. So, okay, assuming you're somewhere in the middle, right? Like assuming I'm going to go for a middle of the road, you have started a startup in a particular ecosystem, you know some people in that ecosystem, but you haven't been systematically networking. You know some friends that have good startups, but when I say you need to know every deal, that seems like kind of intimidating. What do you mean? What's a deal? What's the difference between a deal and a startup? And you don't know any LPs, but like you know some accelerators or incubators. Okay, so day one, figure out what your niche is. I can give you an example. In 2015, my niche was civic tech startups at pre-seed in London. I have a network map on my computer of everyone working in civic tech in the city of London in 2015. If you were there and you were working on civic tech, you probably know me. I mapped out everyone and it took me 6 months, but I knew everyone there, right? And I have them. I had a little flowchart program. I would draw a little dot and I would fill in who is it, who do they work for, and what's the last date I talked to them, and then a little line. Who did they introduce me to? Now I have 2 more bubbles. Who is it? Who do they work for? Last time I talked to them, and then the little lines. 3 more bubbles, 6 more bubbles, 12 more bubbles, and there's like 300 little bubbles in my flowchart program, and I met everybody. So your day one is starting to map out that niche. Map it out by meeting people. Don't just sit in your room and with a ball of red yarn. Map it out by meeting people. If you think you can't talk to everybody in that niche, your niche is too big. So whittle it down. Pre-seed and seed women's health and wealth in the United States. That's Jessica Kamado with Swizzle. That's her niche. It's a big niche, but she's been there for years. She knows people that are doing fintech and health tech targeting women as the end user in the US at pre-seed and seed. She's developed a reputation for herself, and people know that if it's women's health and wealth pre-seed in the US, send it to Jessica, right? So it's a memorable niche that you can really map out and meet everyone. That's your first 6 months. Meet everyone in your niche. Meet everyone and map them out. Who are the journalists writing about this? Universities, accelerators, incubators, startup networks, VC funds, but also maybe public sector funding, especially if you're in the EU. Who are the think tanks? Who are the NGOs? That's maybe interesting too. Like who are the big corporates? Map out the top 10 exits in your niche and then think, now I have a time machine. Here's that exit. I have a time machine. I could go back to any point in time and invest in that startup. And of course, I'd be a millionaire. What point would I choose that I could cut a check into that recent exit? Okay, I'd choose February 2021 because that's when they raised their seed round. What were they doing then? How would I have found them? Well, they spun out of that corporation's intrapreneurship program, or they came out of that accelerator, or they came out of that university. Great. 1, 2, 3. I want to meet that accelerator. I want to meet that university. I want to meet that corporate entrepreneurship program. So be forensic. Look at the exits, look at the best startups, look at where they came from, and meet the network enablers along those steps. Meet the founders. They exited. So meet everyone within your niche. And if it's not possible, your niche is too big. Scale it down. Start with a city. Start with a portion of a city, right? Start with only prior to getting VC in my city in a particular industry, right? Start small until you can meet everybody and then branch out. That's your first 6 months. Your second 6 months is relentlessly add value to everybody that you meet. Find out what they need, try and do it for free. Just add value. Connect people, try and solve people's problems, become known as a problem solver and a generous person that is fun and nice to work with, that's helpful. Then you won't need to do as much outreach. Now it's inbound. People are connecting people to you because they know you're helpful. So now you're filling in your network map. Your third 6 months, now you can start building the groundwork towards a fund. So start thinking about where are the best deals coming from. Set yourself a goal of trying to see 100 deals per month. I know it's a lot, but that's what a good VC should see. They should see 100 deals to make one in every month, right? So set yourself that goal and try and figure out how that's possible. Now you might need to broaden your niche a little bit. Okay, now it's health and wealth across the entire United States as opposed to just Seattle, where Jessica is, right? So broaden a little bit and try to find the deal flow enablers. Also, start to map out who your LPs could be. 97% of capital for new funds comes from high net wealth individuals, not fund to funds and not family offices. So who are the high net wealth individuals in your niche that are investing in founders, that are investing directly in companies or investing in other VC firms? Start to meet them. And what do? Relentlessly add value, be consistent, figure out what they need, start to build a relationship. You're not a GP that's fundraising. You're Connor, you're Joe, Hey, Joe always invites me to his podcast and he's got some events where he's invited me to be a speaker and he made that article that one time and asked me to participate and asked me about my thoughts and he asked me for advice and I told him I needed this and then 3 days later he sent it and he's never asked for anything. Now suddenly it's your fourth 6 months. It's towards the end of your second year. And now what do you have? Now you've mapped out where the deal flow is coming from and you have real relationships with maybe 6 to 12 potential LPs that are values aligned with you, that know you, that see the value you've added. And now you start asking for advice. Hey, thinking about there's a funding gap in this particular area. What do you think? What would a new VC fund look like and do? Is that something that you could support? And now you're fundraising for a fund. So if you're starting for an early stage, you need to make that kind of 1 to 3 year plan. Don't make a 10-year plan. Like, create a sense of urgency for yourself. Set yourself a goal that in this next year, that in 2026, you're going to start fundraising. Build the building blocks for it. So those are your first little chunks of time there.
So now for a few rapid fire questions to wrap up. Ready?
Okay, hit me.
If you could invest in any startup from the past, which one would it be?
That's the one I was wanting to come prepared on. No, look, there's this one that Jessica Kamada invested in. It's at home hormone testing. I think health tech focused on women as an end consumer is the stuff that I would invest in if I had money now. Like, I mean, obviously you could say, well, I'd cut a check with Jason Calacanis into Uber or something. Like, but I think the best and coolest startups right now are the ones that are just solving real problems for real people. And women have historically been shut out of innovations in the health sector because everything's designed and funded by men. So, like, that's a massively underfunded sector with huge opportunity, as long as it's, obviously based in science and is a real improvement and not just something that's shilling money out of people. But as long as it's real, yeah, dude, I'd invest in that. I'd probably invest in Swizzle VC. That's probably what I'd do. Is like, Jessica has entry into these deals. I don't even know which one's the best. I just invest in her.
Yeah, and a VC fund is a startup as well. So I know you've been across 3 continents. What is a place you want to travel to but haven't yet?
Awesome. I'd like to see Antarctica before it's gone.
I love that. What is one fun fact about you most people don't know?
Ooh, I play jazz, tenor saxophone.
No way.
Yeah.
Dude, that's awesome. And is there any thoughts you want to finish or we didn't get to cover on the pod that you would like to talk about?
Just consistency, man. All of this stuff is hard, but it's easy over a longer time period. Just an hour a day of meeting people and talking and showing up and being consistent. And like, after 2 months, 99% of people have given up. The human of 2026 is an incredibly inconsistent human. Like, just show up and add value and do the things you say you'll do and do it over years. And like, if it's not working out after 2 years, pivot. But like, give it 2 years of real daily work, just adding value in your network, and be consistent. Consistency stands out so much, man.
Consistency. That was amazing, Connor. For anyone who wants to learn more about you or Desktop Group, what is the best place to reach you?
Yeah, LinkedIn, man. I'm the only Connor Sattely. So just type my name in LinkedIn and please send me a note when you send a connection request. It makes accepting your connection request a lot easier. But yeah, send out a note on LinkedIn for sure.
Is Desktop Group hiring for roles right now?
Yeah, Decile Group's hiring for a bunch of roles. We have them all up on decilegroup.com. You can search for the jobs. As far as I know, we really are looking for, hang on a second, and this is live, so I shouldn't be doing this. But right now, in particular, we need treasury and compliance big time. So like, if you've worked in treasury and compliance and want to get into helping new and emerging VCs, we need to hear from you. And we need high quality candidates on fund accounting. If you've done VC fund accounting before, like, we need you. We're building the full stack operating system for VC, but it needs really good eagle-eyed candidates for fund accounting to make it work. And we need more. Those are the 2 roles that we need right now, but I think there's like 12 open on the site, legal and fund ops. So if you've ever done anything with legal and fund ops for VC fund, we need high caliber candidates there. We're looking for designers, community associates, venture associates, which are more hands-on, just helping the funds. But obviously those get tons and tons and tons of applications. So we're building it, man. We're building a team. We're growing fast. So people should apply on our site, and we'll get to you if we can use your skills in some way.
Yeah, there you go. I will put the link on the description below. Out of everyone you know who are 2 amazing VCs you recommend as future guests to our podcast?
Well, Jessica Kamada, but at some point she's got to start to get kind of freaked out by how much I admire her investment thesis. I just think she's awesome. She would be the best. You should also have probably Mirto Lalakos. She runs VC Lab.
Awesome. Thank you again. And thanks to everyone who's listening. Comment a question you want to hear from Connor or our next guest. If you enjoyed this episode, make sure to press the subscribe button, like, and share with someone who's interested in getting into venture. We'll see you next time on Break into VC.